Hello everybody, welcome to Spy Money. I'm going to show you how I trade futures, what I do, what indicators I use, and quite a bit of stuff to it. It's a long seminar or a long live stream. Last night was 2 hours 15 minutes. So I guess let's just get started and see where we go from here. So the first thing is we're looking at a 5-minute NQ chart. And you can trade these indicators on anything that you want. It doesn't matter what instrument. But when you look at this chart, what would you be doing? Like right here is the closing of Friday. What would you do? Would you go short? Would you go long? What would you do? I'll be honest with you, at this point, I don't know what I would do as far as right here. I have a feeling that there's a couple of different things, and I'm going to show you a couple of little things that you can actually do. So if you had an indicator like this, it's actually a drawing tool, not an indicator. If you have a drawing tool like this, it looks like we have a point there, and a point there. But if you move this back, then you have it here, and maybe it's going to come down to here. This one, it looks like it's going to come down. But really, you can move this any way you want to see what you want to see. You don't know really where it's going. This right here, if we look there, that is a very good channel, and it looks like it's probably going to go up. So to find where it's going to go is very hard. You can draw any kind of line you want. You can come up here, and let's just say you drew some divergence. Okay, so you have this one, this one, this one, and do you think this is going to come up and hit it or pull back? You can draw zones. You can draw anything. So I come up with another way, and it's not really, it's an indicator as I sell it, but it's not really an indicator like you are used to. So I'm going to go ahead and open this up, and I'm going to show you some different things. Actually, before I do that, I am going to let you know what it's actually called. And actually, that's the wrong one there. So it's a Spybot Ranger indicator is what we are going to talk about. We're actually going to talk about two indicators, and this is the first one. And the very first thing we're going to talk about is the previous day open, high, low, close. And you think, well, what can that do for me? So on this one, when we add the open, high, the previous day open, high, low, close, let me find my thing here. When we add this, it shows where you're going to be. Now this is several days here. So being several days, we're actually looking more along the lines of this right here. So when we see the previous day low, which is actually right here, that is our bottom point, and then all of a sudden it took off. It would be nice to know that if we come down to this point here, that is the bottom, and then we can go long. If we knew that, we could get right off that bottom, which we would not know. And then we could take it to the high of the day, and that's $4,295. So roughly $4,000 you would make on an $8,000 trade. And that's just getting in here and letting it go. And that's, letting it do all this. You got one commission and all that. So adding that really helps you. So let's go ahead and go back and just look at one day. When we look at one day, this is really what we need to look at. So now if we go ahead and look at the next thing, which is the pre-market open, high, low, close. So when you do the pre-market, we're going to go ahead and add this in. And let's see here. I'm trying to do this a different way than I did last night, and actually I think it will actually benefit all of us. It's a little more organized. I spent quite a bit of time today getting this ready. So we are going to look at the pre-market. So the pre-market high, low, and close is all based off from when we opened right here and then we come down, we had our pre-market low, and then we actually hit a high right here. Now our pre-market stops on this one. We're using the US Open. That's what we're looking at. So the US Open Eastern time is 9:30. So our pre-market high was right here. Once we opened, we actually broke through, and we can see that this is a resistance line. So when this opened up, we actually broke through that resistance, and we actually come down and hit our support on our pre-market low from right here. So when you look at the OHLC, then you can really see a lot of support and resistance lines that that it's going to work on. So now we're going to talk about the current day. What happens during the current day is another support down here and another resistance up here. As this moves during the day, the current day will measure from midnight forward. So we're on Eastern Standard Time. So when we are looking at the resistance levels here, we're also looking at the current day open. If you notice, we opened at midnight, and look how we come down and retested that before it shot up. We come down right after the open, like probably, what is that, around 10:45 or so, and we retested the current day open. So you can see that this right here is a valid support level, and then we come right back down, made a new support, and then come up. A lot of times this will actually come down and retest that and come right back up. As you can see, the current day open, it actually come down, retested, and then shot back up. Now our mid did not happen until this high was there. It was right here, so our mid was a little bit lower, because this is going to move throughout the day as it makes new highs and new lows. Your mid will be the middle between them. But when you're trading it, you will see the price will start hitting that. So now we're going to take off that one, and we are going to talk about the next one. The next one is your opening range. Your opening range is probably one of the biggest parts of the market that you're going to have, and most people don't know how to trade it. And your opening range is going to be, what my settings are from 9:30 to 9:40 a.m. So your opening range is going to be based on 10 minutes. When you look at this, this is also called an initial balance. So when people talk about the balance of the market, they're talking about this area right here between the two yellow lines. The dotted yellow line is going to be your midpoint. Now all this is going to make sense in a minute. I'm going to put everything together and it's going to make sense. But right now we just need to understand these levels, how important they are. This indicator is not like a normal indicator to where you have lagging indicators and such. This is predetermined. As soon as we come out of 9:40, we're going to be able to determine where our resistance is and where our support is here. Now in between here is where we don't really want to trade, because this is where all the buyers and sellers, they're just chopping it up. We want to trade outside of that. So when we come down to another one, so now we're going to talk about the Fibonacci, the open range Fibonacci. Now open range Fibonacci is very important because it gives us other levels that we can trade from. So let's look at the open range Fibonacci. Now if you all have any questions as we go, just let me know. So we got open range and fibs is this one. Oops. Right here. So now we've got our open range where we were, and we've also got Fibonacci lines. Now, all of these can be changed. You can make the settings that you want. So it's a matter of how you want to trade yourself. And the Fibonacci lines, you can adjust those. Like on this one, I've got a 15.3, a 382, a 50, 618, 786, a 100, a 138.2, and a 150. But when you look at these, you can see that we are bouncing off of these levels here. And most people would have a hard time drawing fib lines because they can't figure out which leg and this and that. And honestly, drawing fib lines is not easy. It takes a lot of practice to learn how to do it. Well, this indicator, the Ranger indicator, does it all for you. You don't have to do anything. It just does it. It puts them there. It knows what it is. It labels it for you. So you know what you are trading. So on the next one, let's talk about the supply and demand zones. A lot of you like to go ahead and trade zones, but for the life of you cannot make a zone for nothing. I have trained a lot of people how to do it, and to this day they still mess it up. They still have a really hard time making those zones. So this indicator puts the zones out there for you. Look here how it hit this one. Now as soon as we come out of the 940, these zones are made, so you know where to trade from. It's hard to see, but there's one right up here, there's one here, one there, and one here. And this zone, we stayed in this zone a lot right here. These are supply and demand zones. So we are looking right here, you've got buyers and sellers. And it's just a matter of who's going to win. Whoever's got the most money is going to come out of this zone. So if the sellers have more money to drive it down, like right here, they drove it down. Right here, the buyers, they were a bunch of buyers right here, so it pushed it up. It went up there, the sellers kind of kept battling out a little bit, and eventually the buyers took off. So that is your demand zones. Now you have Fibonacci pivots. A lot of you like Fibonacci pivots, and I do too. I trade them all the time. I think Fibonacci pivots work real well. If you trade them right, you'll like them. And let's go ahead and add the Fibonacci pivots in on here. So now we've got Fibonacci pivots. A Fibonacci pivot, the way it works is you have a pivot point. This right here is like the main pivot point. If you're above it, you're bullish. If you're below it, you're bearish. So you go long here and you go short there, and you can trade to these zones. But as you can see, they don't always hit it. You know, we pushed up, we just didn't get it. So these other levels actually come into play where you would want to be. So now we have floor trader pivots. Floor trader pivots are how the institutions trade. So when you are looking at floor trader pivots, they move more so than like Fibonacci pivots. Fibonacci pivots, when you open at 6 o'clock in the evening, your Fibonacci pivots are there and they stay there the whole time because they're based on previous days' open, highs, lows, and closes. Well, floor trader pivots are not. Floor trader pivots move during the day, therefore causing price to move because it's based on today's price. So when it's based on today's price, it will start moving. Now, right now, it shows a floor trader pivot here. Now, when the price opens at 6 o'clock tonight, this floor trader pivot will start adjusting to this price here. All of these will stay the same, but these will start adjusting. And floor trader pivots are a little bit harder to trade because they are constantly moving. As price goes up, this pivot point will start moving up with it. So they are a little bit harder to trade, but they do act as a good support and resistance line. So now we're going to go ahead and go back, and what we're going to do is we're going to add all of these to the chart to where you can see everything, and then start showing you how you can use this to actually trade using the indicator, the Spybot Ranger indicator, to where you'll know what you're looking at when you're trading it. So here's the meat and potatoes for you guys. This is what you all been wanting to see. And I'm going to show you a couple of different ways that you can actually trade. So I'm going to go ahead and add the forward trader pivot or the previous day, and then I'm going to actually, I'll tell you what I need to do. Instead of adding all those together, I would be better off, and I probably should have done this ahead of time. There's always something I forget. Let's see here if I can add this one here. Bear with me 1 second. I'm sorry about this. I thought I had everything set up to where we would need it. And then we will add we're going to add this one here. And then I'm going to add one more to this, and it will show a whole lot easier. And there's also some other things I do with this indicator that really helps out a lot. And let's see here if we go. Oh, I didn't show you the risk reward. I need to show you that. So if I go in here, and my apologies, I didn't show you one thing before we go in. I can leave those on. And let's see here. I thought I had everything on here for you. Alright, so that's the one I want right there. So I'm going to go ahead and show you this. And then I'm going to add the risk reward. A lot of people want to trade based on what their stop and so forth is. So when you trade by the stop, and I need to add the open range to this so you can see it. And so we're going to add this, and then we're going to add the risk reward. Here we go. Always forget something, don't we? And remember, if y'all have any questions, just let me know. So I'm going to go ahead and close this out so we can play around with this part. Now, on this one, we have our entry. Let me go to a smaller, we'll go to 100 tick just so we can see it better. On this indicator, what we're looking for is we want to trade short of the open range low. So when this gold shaded area right here disappears, that means it's time to trade. So when you see the gold stop, it's time to trade. You don't trade in this area right here, because this is what's trying to find direction of the market, and it's your open range. So on this one, we have on the bottom, you see a little green line right there, green dots, and then you have a yellow. The green dot is your entry. So what you're looking for is to go ahead and enter here, and then you're going to have different stopping points, which we're going to get to, but I want to show you the risk reward. So on the risk reward, right here is where your stop would be. There's your entry, and then here is the risk reward. So when you're trading, some people trade by 3 to 1, or 5 to 1, 8 to 1, or 10 to 1, whichever. So on this indicator, as soon as you see that the price is getting ready to come down, you go ahead and put a buy stop there, or a sell stop. So if you come down here below, and actually I've got to sign in, that's what's wrong. I didn't have my connection signed in. There it goes. So right there, we have, like on this one right here, for instance, if this was toward the end of the day, we would come up here a little ways, right click, and then we would hit a buy limit. So if we hit the buy limit, let's see here, it's messing up on the connection. where it's after hours. Bear with me here just a second. We'll get to this and you're going to understand. I'm going to put all this together into the end and you're really going to understand what's going on with it. It's a lot to take in at first, but once you get going, then it's fine. Let's see here. Then we go back up here. It just won't let me do it because of the after hours. I don't understand why it won't. But you would right click and there's an area up here where you can hit your buy limit. When you do that, you would drag it down to your green line. When the price comes up and hits that, that would enter, and then you can put your stop here because it's predetermined in the indicator where you want to be, and then you can move your profit target to the risk reward. So that allows you to have a risk to reward ratio based on your strategy that you personally have. So let's go ahead and go back to this, and let's see here. Let me go to the indicator, and let me go back to add all this together to where you can see everything together. Now on this you have, so we're going to have our risk to reward right there. We're going to take we're going to add our, so we already got that. We're going to add our zones in. Let's see that one. Very sorry about this. I had it together where it was going to be good. So we've got this one here, and I got to turn everything on in a sequence in order to make it work right. So we'll do that and do. I've got a lot of different indicators so I can show you a little at a time, and I'm going to put just where I have one indicator on, and then we can show you everything, and then I'm going to come back to the end and show you how you can adjust the markets. There we go. So right now, what we're going to do is we're going to go back to the very beginning. Now, I've got all of this information on there at one time. Having all of it on there at one time is going to help you better understand what we're trying to do. So in the very beginning of the night, you can trade different opens. You can trade the Australia Open at 8 o'clock at night, which is Australia and Tokyo. So at 8 at night, you can trade them, and then you can trade your Hong Kong market at 9:30 at night, and then you can trade India at 30 minutes after midnight. London is at 3 a.m., and then you have the U.S. Open at 9:30 a.m. So by trading all those, it will allow you to have 5 different markets that you can trade. So on this one right here, and for some reason it is not showing all the time. There's midnight. I don't know why it's doing what it's doing. So let me try a different connection here. It's not showing pre-midnight. It's on the weekend, so it's harder. Let me see if it'll show it now. It's just not showing it for some reason. But is there's the end, which is they're showing that at midnight. Let me go back in my settings. I know what it is. It's on my times. Yep, that's what it is. The opening range final time would be 17, and this is why it's important to have your times right. Then you have the end time would be 9:29, and then 17. There we go. Now it's right. So our start time is right here. That is our session start time. So we have a session time. We have a current day, which is starting at midnight. And then we have our daytime. So if we're going to be trading the US Open, all of this over here is very important. We need to know where our pre-market low is. We need to know where our pre-market high is. And we also need to know the previous day low and high. So the previous day is the blue lines. That's what the blue is for. And then your red lines are the pre-market. And then you come over to your opening range. So when the market first opens, you're going to have a lot of movement here. So let's go ahead and go to 100 ticks so you can see it better. 1 minute is sometimes harder to see it. One more right here. So now we're looking at the opening range. We have not made any trades whatsoever at this point. We're doing the trades after the open. Actually, it'd be after 10 minutes after the open is when you're going to actually make your trades. Now, you can set this to where you have different markets to trade. You got 5 markets that you can trade this strategy from. But see, on the opening here, we went up. That is in the gold. We don't trade until we get into this black area over here. And since we never went up through there in the very beginning, what you would do is put a buy order in right here, and you put a sell order in here. You can do market or you can do a limit. If you do market, if this comes rushing down through, you might get filled in down here more so than here. If you put limit, and if it comes down too hard, you may not get filled at all, but I would rather have a limit order in here to get to the tick that I want, as for it to fill 2-3 points down and then come back up, and then I lose more money, because a lot of times when this comes down, it will come right back. So what you're looking for is to enter a trade either below the yellow line or above the yellow line. Since the price is coming down, we've already got our sell order here. You enter your order. You enter the order, and then when this red line comes down, you hit it. So you would actually enter a trade right here. And then when it comes down and comes up, there's your stop. Okay, so if you don't take profit right here, you would get stopped out here, and you'd lose. Actually, that would be, change the tick on that, because we actually go to a different tick on this. Right here, you pick your stop ticks. On MQ, we do 60. And we do our entry 1 tick below the yellow line. So when we do this, it moved our stop up here. So if you stopped out up there, you're going to lose $300. That is what NQ you got. You need to trade with a big stop on it. But when you look at this, you're thinking, well, shoot, I wish I could have taken money out here. So there is a little trick that you can add to this, and it's called the Spybot Mover. When you add the Spybot Mover to this, it's a game changer. I use a weighted moving average of 13. That's what I use on it. So when this comes down, instead of waiting on the candles to come down and hit these areas down here, which we're going to discuss in a second, you want to go ahead and bring your stop, like your initial stop would be right there. Let's make it a different color so we can see it when it gets run that red. We use a white. So your stop is initially right here, right up here on this red line. But when this starts coming down and you get to say 5 points, you want to bring this down to where you're 1 point down. So that's going to be 54.25. So when this starts pushing down, you bring your stop down 1 point. And that way, if it does decide to come back up, you're not going to lose a lot of money. You're actually going to take some profit from there. So when you take that profit, that is going to help you from, at the end of the day, if you take $20 all day long, you made money. It's not much, but you made money. If you let this go all the way back up here, you're going to lose $300. So when this comes down, if it is just staying right around this line, you leave your stop up there and let it play out. But if it keeps on coming down, you go ahead and move your stop with it. When you get to 10 points, which this one did not hit 10 points, but when it hits 10 points, you bring it down to 5 points. And then at that point, I'll show you the rest of it in a second. But when we're at here at 1 point, and this starts coming down, and you have your mover, when that candle closes above your mover, it'll turn green, and you want to set your stop right there on top of this. And that way, if it comes down, you'll stay in the trade. But if it pushes up like it did here, you'll take money. So on this trade, you would have entered, you have actually exited right there. So you'd made $75. Well, $75 isn't a lot of money, but if you do that, 10 times a day, that's $750, and you've got $40 in commission. So yes, that's good money, and that's per contract. So right now, we're going to be up $75 because we use the Ranger indicator for the entry, and we use the mover to actually secure this profit. If we didn't have the mover here, then we would have potentially lost, because when it started going up, we're going to be in the hole. Maybe you would have stopped out yourself, just took the loss up here because you're afraid it's going to go there. Emotion gets involved, and that's what we do. So now when this comes up and gets above this yellow line, we're going to go ahead and make a new entry. So this new entry, we're going to make this a blue. So this new entry is going to be right here. As soon as this comes up, we're going to come down here and put our sell order. So we're going to right click, and there it is. Now it's showing up. I don't know what it's doing wrong, but you're going to make your entry down here. It's just not it's messing up on me. So when it does that, it will not allow you to, I know what it is. Hang on 1 second here. Let me do this. I know what the issue is. Here we go. So it should do it now. If we put a sell there we go. Now it's going. So if we come down, we're going to have our entry right here. So right now, what we're going to be looking at is this right here. This is the candles that we're seeing. So let me make it a little bigger for you. And as this comes up, we've already got our entry here. So if it comes down, we're going to enter a trade. So when we go over one, boom, we entered that trade. At this point, we have entered a trade right on that blue line, which I'll move this over. And then our stop goes right up here. So we'll immediately have our stop up here. So on your ATM strategy, if you go ahead and have it set up to where you're on the 60 tick stop, and then say do a 180 profit, that way as soon as it enters, your stop is going to be here immediately, and your profit's going to be way down here. Now, how do we know where to go? What is the strategy? How much are we trying to make? And that's a big issue that a lot of people don't know. They don't know where to go. So if we're going to enter here, where are we going to try to get our profit? Where's the market going? And a lot of people have no clue, but what will happen is you will retest the pre-market low and the pre-market high. In this particular case, this is Friday's, by the way. In this particular case, our pre-market high is right here, and our open range high is here. Usually, not all the time, but most of the time, if your open range is higher than your pre-market high, you will sell off. So when you're coming up here, you can actually play off of this up here, and I'm going to show you a little trick that you can do using the mover in order to do that. So by finding out where your levels are, being your previous day, your pre-market, your open range, and then your current day, and then looking at your fibs of where they are. I know it's a lot of information, but once you start seeing this, it'll start making more sense. So when we enter a trade here, our profit target is going to be right on this red line, which is the open range or the pre-market low. We're going to be like one tick above it or something like that, because we usually just go right before it, because sometimes they'll come down right at it or just before it and then bounce out. So we're going to be looking for this area. Maybe you go for this zone right here, and that's what you're looking for. Now, as you can see, we never hit that. It just stayed up through here on these particular trades. So how do we trade down to that? So a lot of people don't know where, at what point do I give up and just take my profit? When these candles are going up and down like this, a lot of times it'll shoot down like this one here. You'll shoot down and you think, well, we're double bottom right here. I ought to go ahead and take profit. Well, here's another way to look at it. Let's see here. I'm sorry, I missed the questions. Some guy's not happy about it, so I'll just leave him alone. So whenever you're coming down and you enter another trade, so right here you're going to enter, and then as this comes down, we're just going to leave this right there, and as this comes down, we're looking at this mover again. But we see where we went through the fib. When we goes through the fib and it goes through a little bit, you bring your stop right up here, one tick above that fib. And as it's coming down and goes through, if it comes back up, you take your profit. Or maybe you play it by the mover again. So if you play it by the mover again, then you would actually have stopped out up here. But if you play it according to your fib, then you would have actually stopped out right there. So when this comes down, at this point, you're up $290. You look at your daily profit of what you're trying to get. So let's say you're trying to make $1,000 a day. If you're trying to make $1,000 a day, then maybe you take your $290 right there. Of course, you wouldn't get it off the bottom, but $265, and then you got your $75. So right there is going to be what, $350 or so, give or take. But if you stop out right here, you got your $205. So you've secured this profit. If it breaks through your fib level or your level down here, normally it will keep on going. And if it pulls back, it will usually keep on going up. And as you can see, this one broke through that fib and then it pushed right back on up. So if we would have taken profit up here based off of the mover, we'd been at $100. If we bring it down here, we're at $200. So every time that it crosses over the yellow line, we'll set our sell limit immediately. Once it goes up and it's holding up, we'll go ahead and bring it down here to catch the next trade. So on this one, we're going to move our entry over here. Now, if it's making green candles like this, I will hold off. But when it goes up and it pushes and we see this wick, I would be having an entry here. Because we're looking at a double top right here. And since we got the double top and we are in a bearish move here, that is a good signal that we're not going to push over. So you want to have your entry right here. So if you have your entry in, then you're going to go ahead and enter on this candle here. As it starts coming down, you're going to push through this fib. Once you get the 5 points, you're going to be 1 point. And once you get the 10 points, you'll put the 5 points. You're trying to secure some profits, what you're trying to do. And then as it pushes down through this fib, you will bring it to here. So let's just move this over. And so now our stop is going to be here. As we push down, we're going to be here. We come down to this fib and we hold it right up here where it is. When we push through and go down, we bring it about halfway. When you bring it about halfway, and then you start pushing on down and you get through this fib, then you want to come down here. And if you watch your mover, you'll see your mover that your price is not even coming up to it. So that's a good sign that it's coming down. Then as it comes through, we go through our current day low. Actually, that's not current day low. That's our mid, I believe. But when we push through this level and come on down, then we go ahead and bring it down to here. Once we bring it down to here, our mover is still showing good. And we come down, we push through this fib. Once we push through that fib, we come down halfway between these two. As it keeps on pushing down, then we go ahead and we get down to this level. Now we bring it back down to this one. So we stay one tick above that. Whenever you push down through here and to come down, then you bring it down. You just keep chasing the candles down as you go. Right here is our zone. That is a good spot where more than likely it will probably bounce out. One thing you can do, there's a couple things here you can do. At this point, you could be at $575 here. You've got $275 here, so that's going to be $850 that you would be. So right there is $850. If you took it right there, you're going to be $700 plus the $275, so you're $950. And if you got a $1,000 a day contract winning, that's your goal. You entered at 9:43, and you're done by 9:45. This is 2 minutes worth of trading. That's how much it is. So it moves fast. So when you're looking at this, now if you trade a higher tick, some people trade a 200, a 300. Some people trade a 1 minute or a 5 minute. Now it's going to show a little bit different on each time frame, but the trade is going to be the same. I like a 100 tick trade because I can see more of what's going on. And this is moving fast. Like I said, this is like a couple minutes right here. It's not very long. But in 2 minutes, you would have your trade. Another way you could do it is if you just stayed in this trade right here and just kept on letting this go and kept your stop up there and then took your profit down here, you'd be at $700 here. But you lost, a potential making $275 right here. So as this comes on down, you can take your profit right there. Usually when this will come down and push through into that, a lot of times I will bring my stop right above the top of this zone because it will push up. If this is in a good downward track and we've got our pre-market low right here, that's a good sign that we're probably going to keep on going to it. It's just a matter of when. So one thing you can do is as it comes down, you can hold your stop right up here and let it kind of play around this zone. We actually had a zone right here that it was ranging in, but we made a lower high right here. So making a lower high, so if you look at this, and we're going to get into lower highs here in a minute, but once you get there and then we come up and we made another lower high, then you move this down. You could actually bring, once you've made this high right here and it started coming down, you can put your stop right above that, and if it come up and push through, then you can go ahead and secure that profit. If it doesn't, you can just kind of weigh this out. So from right here on this candle, it's 9:45 to where it broke through was 9:47. That's only 2 minutes of what you're looking at. So by looking at 2 minutes is not very long. You can have your stop here, or you can have your stop. You can have your stop right up here. If you had it up there, you're still going to secure $395. Down here, you're at $755. At this point, you have to decide what's your goal. You don't want to just keep trading for no reason. You want to have, what your goal is going to be per day for what you're trying to make. So if you're trying to make 500, you would just go ahead and let this go and keep chasing your candles down. So like when this candle closed and opened here, your stop would be right there. When this one closed and opened there, you'd bring your stop to here. And you just keep chasing that candle down until you get to where you stop out. When this one closes and opens there, you would be on this candle and you would get stopped out there. If you did that, your profit would be $660. But if you held it, if say you've already met your goal then just go ahead and leave your stop up here a little bit higher and just let this play out to see what's going to happen. As you can see right over here, we actually broke through it a little bit right there. So this is kind of a zone right here that we're in. It did break down, but as this goes down, and then when we break through here, at that point, you know, when we come down here, you want to go ahead and bring your stop to right above this fib. And then as it pushes down, it hits this, kind of comes through, and then starts going down. You could go ahead and bring it to halfway. And then when it really pushes through, you could go ahead and put your stop right there. Now, at this point, if you had your stop right here, there's $855. You definitely have your target for the day because you made 200 here, you made 75 there, and 855 here. So that's 9, 10, 11, $1,170 that you would have made here if I did my math right. See, 8, 10, 11, $1,130, I think. So a little over $1,100 you would have made there, and you're done. You don't have to trade anymore. Or as this went down, you can work it off of this mover right here. Now your mover is a lagging indicator. Your ranger is not. Your ranger is, I mean, those levels are there permanently all day. Once they have made, like your pre-market at 929, they stay there the rest of the day. So those levels are what you're looking for, where now the mover indicator is a lagging indicator. The price has to move before this indicator works. But when you see that the candles are closing above the mover, that's a good idea that's going to keep on going. Another way to look at it is if you have this right here, you come down and you keep on bouncing off of that bottom, that's your resistance. And then whenever it comes up and makes a higher high than this right here, that is a good time to get out. But if you looked at this one, and let's just say you played the mover and you got out right there, there's $915 if you got out there. So you're still $9, $10, $11, $1,180 for the day per contract, and you've only made 3 trades. So right there is how you do that. And you just keep on doing this through the whole day that you're trading. As it keeps on coming down, you push through the levels, you just keep bringing your stop down to protect that profit. Now, I'm not going to do the whole day. And the reason I'm not is because it takes a long time to go through each trade. But you can see every trade is exactly the same. The only thing you have to do is decide where should you go. Now, when you come back up here, I'm going to show you how you can actually make some money here as well in just a minute. But when you come back up, if you get way up here real close to that yellow line, and then you have that big wick come down, that is the sellers pushing it down. So it's probably not going to go up there. And when this comes down, we make a lower high here, a lower high here. At that point, it's a good time that you could possibly get another trade. So let's just say that you waited till you got in down here and you got in there and you kept on pushing through. So you push through here and come down, so your stop will be right there. And then, or maybe you've made enough money today, so you just keep your stop, say, up here, to where if it went up, you get stopped out, but you just kind of let it keep on going. It's going to be up to you, and you're not going to know what's going to happen here. I mean, if you look at this right here, you're seeing that's kind of going up and down. We have a lower low here, but then we have a higher low there. When you have that lower high, that's a good opportunity that you might want to think about getting out, even though it did go ahead and keep dropping. So when it started dropping, your profits started going up. So you start chasing with your stop, these candles coming down in these levels, and then as it comes down and it goes through this fib, comes down, your stop will be right there. So there's $670 you would make on this just by hopping in right here. Now, if it pushed down like that and then it pushed again, maybe you're braver than me and you got in right there. I would get in down here before I would up there. So when you're looking at this and you're looking at the past, you have to see where you are. So that high coming back, you've got a lot of resistance and support based off of that line as well. So it's just a matter of looking at your chart. But if you just go from yellow to red and chase through each one of these levels and you chase it with your stop, you're actually going to make really good money. Now, some people will just get in here and just stay in it all day, and they'll put their stop up there, and they'll just put their, what target they want to hit, whether it be a risk reward or the pre-market low or whichever, and stay in it all day. The problem with that is you never know what price is going to do. So if that person would have went ahead and bought or sold right there, they would have been in all this profit down here and then got stopped out right there. And then it kept on running. So now they've lost money today, where the person that's going to, abide by these levels that you're trading, you're going to make a lot more money. I think because of how you're actually making the trades with it. Now, some days you're going to make a lot more money just to get in a trade and just keep on going. And maybe you make one trade and you hit your goal. Say you're an 8-to-1 risk reward ratio. Or if you're just trading to this level here. If you trade to the level, which is the strategy, and you come down to here, you're looking at $2,260 per contract. But you're thinking, well, I wish I would have got in up here and took it. And if you did, let's say you're a superhero and you got off at the yellow, there's $3,600 on one contract, knowing that it actually hit over here. But we don't know that it's going to hit here. We don't know for sure where it's going to go. We can assume based off of the open range here and being the pre-market high here, we're pretty well probably 90%. I don't know if it's the right percentage, but probably 90% sure that it's going to come down. So maybe you got in right there. But when you look at this, that looks bullish, doesn't it? So when we're coming down here and we go on up, right there, that is a bullish trend. And we made a higher high than what we did here. So the odds of this coming straight on down are slim. We're thinking that it's going to pull back to here and then it's going to race up. So it's kind of hard to tell for sure what's going to happen. And the only thing you can do is try to figure out your win percentage as far as where you have your open range breakout is higher than your pre-market high. Most of the time, it will just go ahead and sell off. So when you look at this one, if you'd got in the whole trade, you'd made more money just getting in one trade and letting it ride all day. But we don't know that it's going to do that. So what I do is I trade the yellow to the red. And I trade it to where when it starts pulling back on me, I go ahead and get out, take a little bit of profit. Usually in the very beginning, the profit that you will make off of, like the trades off of the open range breakout, it'll usually kind of go back and forth a little bit. And then all of a sudden, it will drop. That's usually what happens. And sometimes it's a couple hours in before it will do that. So on this one, we made all our money right here. If we're trying to make $1,000 a day per contract, which is very good money, we're going to be done by, say, 9:45 or so is when we're going to be done. So how do you trade this other? So let's go ahead and clear off some of these the drawing tools here. How could I have made more money? Well, up here, if you're using the mover with this indicator, and that's what I recommend. I don't use the mover by itself because there's too much unknown. But when you use the open range, as far as the ranger indicator, when you use that to find all your levels and then you have your mover, it will help you kind of find direction a little bit. So when you're looking at the open range here and your pre-market high is here, that is a good chance it's probably going to come back down, as I keep saying. This right through here, we're just kind of slopping around a lot. There's not really any clear direction. But at this top, when we come down, and then we come back up and we made a lower high, and then we come back down to here, that is a very good indication you're going to sell off. When you make that lower high, that's a real good indication. So where would my entry be? On this one right here, when it comes down, comes back up, and it comes down again, I would put my entry right on through here, maybe even here, one of these two. Probably the best place will be about right here. And then as it comes down, let's see here. Right there is probably your better entry. That way you're coming down and you're actually breaking this lower low. So at that point, you're getting in. And if we go ahead and take this one, you could actually stay in the trade the whole day. So let me come back down to this one. So if you got in right up here on that one, you could actually weather this storm out. I mean, I wouldn't let this just keep on coming back up because we're making higher highs. But when this come down and kept on going, and then we broke right there, I would be out no later than that right there. So when we broke this higher high, which I'll get it a little bit bigger for you. When we broke, we come down, we pull back, so we had a high here, a lower high. So we use this right here to mark it. And then when we come down and we pull back, we would have a lower high right there. We come back, we retested, we didn't break it, so our stop would not hit. And then when this, and we're also breaking the yellow down here, so that's a good sign to go short. So whenever it comes back and then starts coming down, and then we pull back again, our stop is going to be down here. We pull back here again, we're going to go ahead and go to there. We come down, we pull back, and it starts going down, we're going to bring our stop to there. At this point, we're going to come down, we're going to come up, and then back down, and then we're going to go ahead and bring our stop to right here, because that is a lower low, or a lower high, I'm sorry. So we're looking at, let me find it here again. Actually, we would have stopped out up here, looking at closer, because that would be our lower high, and we would actually stop out right there. Actually, I'm sorry. When we come down and we come up and then we start coming down, that is where we would be. So we would actually stop out on this candle here. So when we come down, we stop out, we're $1,940. If we're $1,940 and we got a $1,000 target, I mean, when this comes down, you know, you could have made more money down here if you were a superhero and got the bottom at $21.90. But I would have my stop right there, and I would be done for the day. I wouldn't even trade anymore. There's no sense trading. Once you hit your target for the day, just quit, because if you don't, often you'll give your money back. So right there is $1,935 if you trade it based off of the Ranger indicator, knowing where your high is, and then seeing how this went up and made a lower high there and come down. You can use your mover to know that you would end up going short. Often this will just kind of range back and forth, and it will be like a pinball machine in between those yellow lines. So many times you can go ahead and get in. Now, if this had come up and retested the yellow and then come down, I would not have got short there. When it retested, I would want to see it come down and then pull back and make that lower high and then come down. That's where I would be wanting to get in. Maybe it's down here. Maybe it tested here. We pull back to here, and then it started coming down. I will be getting in right through here to go short. So when I make the lower high, that's what I'm looking for. So let's talk about lower highs and lower lows. Does anybody have any questions? You can always shoot me a question if you want. I don't want to talk over you. I want to make sure you understand this. This next part, you know, I hope you understand that the open range breakout, trading below the yellow line, that's always going to be your entry. So if you're thinking about getting in up here, you know, I wouldn't get in right there because there's no entry. But this would definitely be an entry because it might come down to here and then bounce up. But that is definitely an entry. No matter what you think, that's an entry, and here's your stop. Back testing this strategy over the last month, you know, and I haven't taken every instrument every day or whatever, but I've just kind of like spotted all the way through. and I have not had a losing day. It's always made money by the end of the day. Now, I'm not saying that it didn't lose money in the beginning, because it will. You have to have some drawdown sometimes. In this case, we never even had a losing trade all day. It made over $8,000. And as far as the Thursday, I think it was either 900 or 1200 it lost in the very beginning, because it would come down, get in, come right back up, and it just kept doing that. But by the end of the day, NQ made a little over $2,000. So even with those losses it had, it still come back and rebounded and made $2,000. But you would have had to have roughly $1,200 of cushion for one per contract in order to come out. So let's talk about lower lows and higher highs and all that. So we're going to make a few lines here. And I'm going to make this one. It's actually, we're going to make that one. And then we're going to make another one. And we're going to make this one blue. So we're going to make a blue one. And we are going to make a red one. So right here, if we're coming down, let's say we're trading this one. So our low would be right there. So let's bring it over. And our high would be right there, off of this one here. And then when that went up and hit this, and then come down and made the lower low, we move this lower low to right there. So that's our now low. And then we come up and we retested. It didn't break it, so the line stays right there. And then when it starts coming down and breaks through here, this low will start moving down until it gets the next low. Then when this pulls back and then comes down, we move this down to here. So what you're doing is you're finding a trend by finding the lower lows and lower highs. Then we come down, we actually made one tick lower, but it's lower. And then this one, we brought down a little bit lower there. And we now we're going to make a lower low here. So now we're still following the trend. And then when we pull back here, and then it pulls back, we now have a lower high. We don't know that it's not going to keep on going, but when it goes up, and then it pulls back into the mover here and starts showing that it's coming down, we know that's a lower high. That's not much of a one, but that is one. So now we've still got our low here. We pull back, and then we take off. So now our lower low is right there on this one. It's not much difference, but it did happen. When this pushes up, then we're going to make a higher high. So before we enter a trade, we really need to have a second higher high. So right now, we still have a lower high, so we don't enter a trade. We bring this one up to here, and now we've got a higher high. This is number one. We still have to break this in order to get a trade. And then when this comes up and then comes down to here, now our lower low is a lower low. It's now not a higher low, it's a lower low. When this comes down and then comes up, now we are in a lower high. And then we made a lower low here. Now it's very important you understand where we are right now. When this comes up, do we enter a trade right there? Because we broke this higher low. We do not. We have to have we have to have a higher high before we can go ahead and enter. Now when this pushes up to here, yes, that was a good trade if you wanted, but it was a gamble. The strategy is that when it goes up, we won't enter this one until it breaks again. So right there is a lower high, and then we have a higher high, because we never really had that pullback in here. This was kind of pulled down here, went up, went down, and then it shot up. So we would not enter this trade. You could do it as a gamble trade, but it's not recommended. We all gamble when we trade on some trades because we think it's going to do something, but we don't know. But when you're looking at this and you got the indicators, you got your fibs in here, you got this big, huge zone right here. So by having this zone, that's a good reason not to get in. Question, is $1,000 a good target for the NQ? You know, it really kind of depends on the person. Maybe you want $300 a day. It's the person. I think if you can get 50% of your trade back a day, you make good money. Most stock investors will, if they can make 3-4% a week on their investment, they're happy. It seems like option traders and future traders are never happy with 5%. Everybody always wants to, make a lot more money than that. Option traders, a lot of them want to have 50 to 100% every week. And then on futures, a lot of times people want to have 300 to 400% a day. And I'm basing on trade. I'm not basing on account value. I'm basing on your trade. So me personally, I think $1,000 per contract is a very good goal. If you're trading 10 contracts, that's $10,000 a day. Once you learn the strategy and you're consistently making your goal daily, the only thing different between 1,000 and 10,000 is the number of contracts that you put in. Of course, you've got to have the account value for it. So on this one, to get back, when we come down, we're actually going to enter a trade right there. So on this one, that wick right there, we're going to enter a trade, and we're going to keep on going. Our target may be right there, or it may be on up. Let's say that you come up and then it wicks down. You've got your mover in there. You want to close out on that mover. So there's $85 you could have made. Now, yes, if we didn't know this, but if you had got in when this went up and closed and come down and come back up, you could have got in right there and made $580. But again, that is not a strategy that I play. That is somewhat of a, I think it's going to do, because we had a low here, we had a higher low there. So that's a good indication that we probably will go up. But that's not to say it wouldn't have went up to here and then pulled right back down in and then maybe sold off and you lost money. You're better off, if you're going to play the strategy, you need to play the higher highs and lower the higher lows. To go long and to go short, you need to play the lower highs and the lower lows. So right here, we get out right there. So what do we do at this point? Well, our high is right up here. And our low is now right here. So there's our low, there's our high. We come down and we're staying in here. So do we make any trades? Anybody want to guess? Chat below, let me know. Should you be entering any trades right in this area? We've got our low here, we've got our high here. Anybody? Answer is no. You do not want to trade this. This is chop. Now when we broke through right here, that is the first low. We were right here. Now we got a lower low. We do not enter until we break it again. So when we went up, now we've got a lower high. That is showing that we're going down. So we would have our entry one tick below this red line. So in this particular case, you would have entered right here and you would have stayed in until when? Would you be going for a target? Would you be looking for a fib? One thing is right here, and then once it went through, your target would be or your stop would be here. And then when it went down and touched and broke in here, come back about halfway. And then when we push through, we come right back up to the top. So on this one, we would make $355. And then on this one, we actually made $85. So if we played those two, we're going to be roughly, $440 or so, 45, something like that. Lower $400 on those two trades per contract. So now we've got our lower low actually happen right here, and we've got our lower high right here. Now you could have played this of where when this come down, you kept your stop up there, and then when it come down and you waited for that higher low or lower high, and then as it come down, you could have brought your stop down to that. Which if you did that, your stop would now be on this blue line. So before, this up here was our lower high. So your stop would have, could have been right there. But your entry wasn't until down here, so that's too far away. We want to have 60 tick on the NQ is a very good stop. It hurts when it hits, but it'll usually win a lot more. And then as this come down and maybe we pull that wick up and then we would pull our stop down to that one. We come down, maybe this a little bit, so maybe we come down to that one. Yeah, you can keep on chasing, but when it come back and stop to here, then you go ahead and bring your stop to there. You come down, and then when that wicked up, maybe you brought it down to right here. I mean, there's scenarios, and it depends on your strategy. There's not a right or a wrong way. I think the biggest part with trading this way is you have to know what your limitations are for the day. If you have lost money today, I would be having tighter stops so I could at least secure some profit and try to get money back in my bank. And then, but if I've got plenty of money that I made today, maybe I go ahead and have looser stops to try to get those long runs. If you would make a $10,000 day trading down to your pre-market low, you'd be on cloud nine all day, and that's how you'd want to trade all the time. The problem is you don't know if this is going to reverse and take off and just stop you out. So I like to play more of a trend, and if I can play that trend and I play the mover so that when it comes back over top of it, then I can go ahead and secure this profit. Even if it drops, I'll be happy that I got my profit right there. And if it took off and started dropping, at that point you can decide if you want to get it back in based on your higher highs and higher lows and things like that. So on this one, we've got a lower high there, lower high here, and then, I mean, really, that's not really a higher low. Right there is our lower high. And then when we broke this and went up here, that is going to make it a higher high. And then we've got this low, and then, but we don't enter here, because if we do, look what happened. What we're looking for, like on this one, if we had this right there, we don't enter here because we have to have one more high. So this is a lower high, this is a higher high. We need the second higher high to enter a trade. So when this come down and then it pulled back to there, our low would be right there. So it made a lower low. So the trend is going down. We pulled up. We pull back to here. That is a lower high. We come down. Now we've got a higher low. As this comes up, do we enter a trade here? No, because we have to have a higher high. When this comes up and then pulls back, now we have shoot. Get on it. Now we have a higher high right there than right here. So when we got that, do we enter a trade? No, because that is the first higher high. And then when it pulled back and come up, yes, that was a good trade, but we don't enter. We wait till the next one. This may have come up here just a little bit and then just come right back down. We have to wait on the second higher high or the second lower low, depending on which way we're going. At this point, you enter a trade. It would enter right there. You come down, you end up going right up there. That's a good indication that it's probably going to pull back. It may not, but when it closed down below the mover, I'd want out. That's $100. So you'd be at $100 right there, or you could have just brought your stop up. If you brought your stop up to say right above break even, you would have still got stopped out, but there's a chance that this would come down to here and then take off. You never know. So only you can decide where your stop's going to go. I just try to help you understand as far as how your higher highs and higher lows go. So when you trade it this way, it makes more sense. Now what I'm going to do now is, unless you have questions about the indicators, how they're traded and so forth, I'm going to show you some different things that we can do here. So I told you all that I'd give discounts. I'm going to put this in the message center, and I'm going to send that to you. There you go. If you click on that link, that will open up to this website on my webpage. I sell either the Ranger and the Spybot together, and it's $11.99, or you can buy them individually. You can buy the Ranger for $7.99 and the Spybot Mover for $4.99. At the top, you'll see a discount coupon. This coupon right here is good through midnight tonight. If you have not purchased the Ranger or the Mover, and there's some people in our group that has bought it, but maybe they've only got one of the indicators, don't have the other, or maybe they have both. There's several people that bought over the weekend. But you can use this, and this will save you 30% off of those prices. And I did have a 20% December coupon on the website, but I took it off. It's no longer valid. So this is the only discount that you can get. I do not run higher discounts than this. So if you're wanting to buy something, right now is the time. Now, if you want, you can send me a contact. If you've got questions, you go over here to the contact, click on that, you put your information in, send me a message. If you do that, then I will respond. I'm the only person that does it. And if you need to talk to me or whichever, I can even talk to you. I can give you my cell phone number, which I will post it in the chat right now. If you need to talk to me, that's my cell number. You can call me anytime you want. I turn it off when I go to bed, so it's no big deal. And then right here is the bundle on both. It's $11.99. What you would end up doing is clicking on Add to Cart, and you copy this right here, the discount code, and you post it in right there. Now you can see it's $11.99. You put the coupon in, and it brings it down to $839.30. That's an incredible deal to get both of them for that. So I'm going to take this out. And if you only want one of them, let's say that you don't need the Mover and you just want to use the Ranger, you can do the same thing. It's $7.99 less your 30% discount. If you already have bought the Ranger, which some of you have, and need the Mover, then you can buy it separately as well and put the 30% discount in. Now, some people have asked me, how do what if I don't have the money to put in a trading account to be able to trade it and have the drawdown and so forth like that? So there's another option for you. If you go up here to the top where it says funded account, and what they do, this is not my company, but what they do is they will actually fund your account with whatever you want. So let's just say to get funded, you come down here and hit start today. The one I recommend the most is the $50,000 account. The $50,000 account will let you trade 10 contracts. It'll also let you, you only have to make $3,000 in 10 trading days in order to come out on that. So once you've made your $3,000, you've met your goal, and you have to trade 10 days, and that can be go in, trade a micro, get out. Once you hit your fund, then you just trade just to keep your day going. Once you do that, then they'll get you funded. They'll put $50,000 in the account for you to trade on. And your threshold at that point is once you make the $3,000 profit go on it, actually I think it's $2,600. Once you get there, then they will put you at $50,100 and you stay there. If you ever go to below $50,100, you have to start all over. So what you do is you trade it up, and let's say you keep $10,000 over your 50 in there. That way, if you have a bad day of trading or whatever, then you're fine. And you have $60,000 that stays in there, and then anything over that, you go ahead and withdraw it once a month. You can only withdraw once a month on their account, which is fine. So you trade it up, and maybe you have $80,000. You pull out $20,000. You leave the 60 in there. That way you can keep on trading. So this is one way you can do that. And if you go back, let's see, go back again. Right here is a coupon code. If you use this coupon, you can save 50% off. So when you go up here and you click on Start Today, and if you click on this, that $167 is now, with taxes and everything, about $90. That's what you're going to pay. Well, I have to pay $167 the second month. No. Once you put your discount coupon in, you will only pay that from now on. So you'll pay the $90 a month on this particular plan, about $90. So you'll pay $90 a month. And then some people say, well, I don't even have a NinjaTrader. If you do their system, you download NinjaTrader for free. They give you a license code to use NinjaTrader. That saves you $1,100. And then they also pay for the data fee. So there's no data fees or nothing. The only fee that you're going to have would be the $90, roughly. So that's one way to do it. But now if you have your account and you jump in, I'm going to show you something else that actually is good for you. If you trade the RTY, RTY, in my opinion, is a much better instrument to trade than NQ. And why I say that is RTY doesn't whipsaw as bad as NQ. And also RTY, the stop is only $100, where NQ is $300, because you have to have a big stop on RT or in NQ to allow for that whipsaw action that it has. Now, let's just say that you had traded RTY, and I'm not going to get to the exact, but you got here at the green line, you come down, and maybe it started pulling back and you got out there. So there's $600. If you went ahead and traded where you had a lower high and it come down, you had another lower high, say you got in right there, and you kept on trading. So there's $645 there. Maybe you went ahead and traded right here too. When this come up, and you decide to get back in on this lower high, and you trade it down to your red line. You know, there's 360, there's 600, there's 645. Maybe you went ahead and, since this was a free trade, you left your stop up here on top of the zone. You allowed this to play out, and then when it dropped down and come down, you're going to have your stop right there, which is 1340. If it kept on going and bounced back, maybe you got out right there at 1440. This is only $500 a trade. So if you've got a smaller account, you can trade the RTY easier than what you can the NQ. One thing about RTY is RTY moves a lot smoother than what NQ does. See how this is like that? I mean, it's almost a perfect way to go. So let's look at NQ. And look how whipsaw NQ is in here. I mean, this is a lot of back and forth action and stuff, and it's sometimes hard to trade. So let's go back to RTY again. See how much smoother RTY is? Now, it's not every day, but probably 90-95% of the time, RTY is going to be a lot less choppy. So let me also show you another thing I do with RTY. I'm going to delete this stuff off. Now, as you notice, whenever I do my drawing tools, there's nothing in here. So all of this is the Ranger indicator and then the mover, of course. There's nothing drawn in here. So let's go ahead. I like to trade RTY on 50 tick, believe it or not. Now, this Friday afternoon, it was just chop everywhere. It was on every instrument you traded. But look how smooth that is. Now, if we come back here, and let's just say right through there, that's all, you know, a lot of chop. You're not going to trade that. And you're not going to trade that anyway because of where it is. So you could actually trade the 50 tick and make a lot more money. When you went up here, you would be long, but you'd get stopped out at 20 ticks. And if we set this to 20, you can see where your stop would be. Now, before I get done with this, I'm going to show you another thing, so don't go away. I'm going to show you something that this indicator does that really makes it good. Let's see, find right there. So we're going to put this on 20 tick. And when we do this, it is going to go ahead and put our stop right there. So when we got in right there, our stop is here, so we lost. At that point, you can determine, should I hit my reverse button? Which is probably smart at this time because we tried twice. Let me make it a little bigger for you. We tried twice to get out and we couldn't. So we got stopped out there. Do we go ahead and reverse ahead of time, or do we let it stop out and then we hop in later? Either way, you can do it. But let's just say that you reversed. If you reversed right at the stop, per se, and you just kept on going, and you kept on going, and let's just say that you pulled this back and let it get out right there. $930 one trade. So there's $930. You're at your goal if you would have taken it at the bottom. There's $1,090. So most people will trade, they want 100% of whatever they're trading. So if you're trading $500 contract, they want to make $500. If you're trading $1,000, they want $1,000. That's kind of like a, I guess, an average across the board of what people trade. And some people are fine if they make $200 or $300, they'll just put their stop down there and let it keep on going, but they'll just keep moving their stop down until they get stopped out, and they'll just take that money. So RTY is really good to trade. ES is not bad. I think NQ is probably the hardest one to trade, but more people want to trade it. So let me do this right here. I'm going to show you something that you can do with this indicator that is just incredible in my opinion. So this indicator has different opens. So at the top, you can pick which open you want to trade. You can put it on manual, put your own times in. You can put it on India, which is 30 minutes after 12. Let's say you want to trade tonight. Tonight after the open. It opens in 34 minutes. So let's just say that you want to trade the Australia Open, which is, let me make it towards bigger. The Australia Open starts at 8 o'clock. So let's go ahead and go back to this one so you can actually see how it would actually trade. Let's see here, that one, let's see. Yeah, that'd be 8 o'clock right there. So let's put this on time so we can see it better. The tick after hours on RTY does not move very fast at all. There we go. So right here, we're looking at 8 o'clock at night, Eastern Time, to 8:10. And this is your opening range breakout. You would have lost money on this one because it wicked down and pushed right back up. But when it went down all the way down here, maybe you had enough time to at least put a break even. Maybe not. You probably wouldn't have. You probably just lost $100 here. But you're going to lose $100 per contract on NQ or RTY trading with the 20 tick stop. And then you get up here and you're going to make it back. So you would have got in right there. It went up, started pulling back. Your stop would have been at the bottom of that zone. There's your 80, so you'd be $20 down. And then when this comes all the way back down and goes to push back up, maybe you get in it at that point. Or maybe you just went ahead and held. And maybe you brought your stop just halfway or whichever. And it kept on going. Right there is $235. RTY is hard to trade in the evening because it does not move at all. It's just like, I mean, you can see the big gaps in price here. It'll be up here, and then all of a sudden it'll drop down here. So it's hard to trade it. So let's look at it this way. If we do, that one's the Australia Open. And then we come back over, and let's say we pick the Hong Kong market. That's at 9:30. So now we've got a different open. Our opening's here. Now we're looking up here, and it's still got your pre-market times and so forth over here. So there's your pre-market high, which would actually be based off of this right here. So this one, you'll be trading from here to there. So if you do that, you're looking at here to right there. So there's $80 on that one. And then when you come down, see this one here, you wouldn't stop out. You would keep on going. This went almost down to the bottom. That's $320. When you're trading the other markets, it does, like in the Australia and Hong Kong and India market, you're not going to make as much typically, but you can. You can make more sometimes. Now on this one, once it went up and retested and come down, let's just say that you went ahead and used the mover along with that and traded it back down. There's $400. Me personally, I would not have taken that trade. I would have waited till it come down here to get below. Now we can also look at, I'll show you the London market. The India is does the same thing, but let's just look at the London. So when we put it on the London market, all these times are automatically figured in for you. And we are looking at this part right here. Now, you remember when I told you about the open range? If it's closer to the bottom, it'll usually go up. And if it's closer to the top or maybe a little bit above, it will be a short. This one's right in the center pretty much. That's about, about the center of that whole market. But if you look how we bounced off of, we come down, this was the previous day, and then we bounced right here, and then we bounced right there. That's a good sign that we're going to go long because it's not breaking through. So on this one, if you got in, according to what the strategy says, you got in, and let's just say you held it the whole day, and you went to the top. There's $1,180, and that's getting in at 3:29 a.m. in the morning. So all of this is, we're looking at candles. So, if this was in real life trading, I don't want you to think that I'm picking trades, because if I'm looking at this, I'm going to be chasing this. When you get that going all the way up and shooting up like that, it will usually come down pretty hard. I'm wanting to take profit up here. That's how I would trade it. But if you're trading it earlier in the morning and you hit this pre-market, let's just say you got in right here and you held that all the way up to there, there's 575. There's all kinds of ways you can trade. It just depends on the strategy. I think when you use the Ranger indicator to find out where your pre-market highs and lows are, and you can see this one here pretty much was a pinball machine back and forth, just kind of kept going. And it actually traded from right here to right there, and then it pulled back and then took off again. So you could trade this any way you want, and you can trade it on any market. A lot of people work during the day, so they can't trade the U.S. Open. So if you can't trade the U.S. Open, maybe you can trade the Australia Open. And often, like if you look at the NQ actually trades better, I think, on the Australian market. So let's open this up. And it's actually easier to trade than it is at the U.S. market. So if you go to the London, or Australia, I'm sorry. So if you look at this one on the Australia market, that's actually, pretty good trading right there. So if we went ahead and traded this one, we got in there, and when we played to the red, there's $370. Nothing to shake a stick at. So, you made about 37% of your money right there. Now, this right through here, where it's just gradually coming down, if you look, we got a higher high, a lower high, a lower high, a lower high. As soon as this come down and then come back up and make a lower high, you can get in right there and then just kind of let it play out. If you did, different strategy, but it's using the Ranger indicator and the Mover indicator to do that. So if you stayed in until, say, let's see here. So right there's a lower high, and then we made a lower high here, and then our stop would be right there. And that's $575, because as soon as we break this one, we would want out. But who's to say you wouldn't get out sooner? Because at this point, you're on a different market. You're on the India market at this point. Because the India market starts right here, and it stops at right here. So this area right here is the India market, and it ended up selling off right there. And then it come back up, so your India market would be, the top would be right there. This would be the top of the open range high. So with it being at the top, that would have been a long right there based off of that. So on the, it depends on what market you're going to trade. And, if you're going to trade all 5 markets or one of them or whichever, you can, pick the one you want. Let's see here. Let me look here a second here. I think I had a question. See here. You just signed out. It's going to tell you the answer. Someone had already bought the indicators, but they didn't know how to get them. And you get them by going up here to your account. And like right here, it says, hello, Brad. Let me log out, and I'll show you something. Let's see. Log out. If you go up here to the login button, and then whenever you log in, it will go to your account and sign in. there's no downloads in here. So if you click here, it's not there. If you scroll down, right here's where it will be. And when you open up that indicator, this is where all your information. The one thing you want to do is make your machine ID. You click on this link here and it opens up and it gives complete instructions on how to make your machine ID. There's also a video to do that as well. So when you do this, then send that to me, then your indicator will work. That was one of the questions. He actually signed off ahead of time. Let's see here. Do you have a handy guide document that goes along with the Ranger indicator? Something to use as a reference as to what levels are optimal for going short or long. Well, there's only one entry for the short, and that's on this green line. And there's only one entry for long, and that's on this green dot. So you have your entry already ready to go. So when it comes down and hits it, it's actually short. So that is going to be your ultimate, the only place, there's only two trades for that. Now, we've talked about several other strategies. One is using the higher lows and the higher highs. You have to go through the second reversal high. So if you're on a lower low or lower high, say right here, and then we come down, we make another lower high, and then we break it right here, we do not enter there. And when it goes up, our higher highs here, and let's just say that this pulled back and then busted through, we would have an entry based on that high there. So it has to be the second one. You can't do it on the first. So when we make that first higher high, you don't get in yet. You get in on the second one. As far as where you're going to, it's going to be based on your levels. So let's just say that we were in a trade, in a short, on this one here. Well, this is our risk reward. We don't pay attention to that for levels because that means nothing. But when we come down and we hit this one and then we drive through, we want to bring our stop down to here. Now, when we get 5 points on NQ, we want to be a 1 point stop. That way we can protect it. Once we hit 10 points, you go to 5 points. And then once we hit this one, if we stop, or we're still at 5 points up here, but if we stop and then start to reverse, we look at the mover and also, maybe the stop gets it first. But when it pushes through and you can see that it's actually going through, we put our stop right above it. So if you chase it by the levels, in my opinion, I think you'll make more money, and that's how I trade it. So if you trade it that way, you're going to be good. Like say, for instance, this one here, we have our entry would have been right there, but when our candles are down here, we've already got our entry in. So when the entry hits and it goes up, it goes through this level and pushes up, we're going to be a stop right here. And then whenever it keeps on going up and hits this one, we're going to go halfway. And then when it pushes through, we're going to come up here to the bottom of the zone. And then when it pushes through that zone and goes on up, we're going to be at the top of the zone. Of course, our profit target is this red line. And we're going to be like a tick or so. So when it gets up there, you just hit your close button if it starts to want to hesitate. But that one right there, you would actually got target. That's 84, and it's 84.25. So you would have got your target there. You do 1 or 2 ticks below your red line. So this one you would have made money on. You would have moved your stop as you go because you don't know what's going to happen. But there's $360 that you would have made. When this come down through here and start coming back up, your entry would be right there. Now NQ, your stop's going to be down probably about right here. So when that hit there, that is 66. We went all the way to 475. Maybe you go ahead and bring your stop up here to where you can protect it and get a point above. 5 points is usually where you want to move because that allows more wiggle. And then when it comes down through here, you got your entry again right here. So you would have made $360, $20, and then right here you would have made another $360. So this one here would have went right up. Of course, I moved that a little bit too much. But you had made $360, $20, and $360, and this is on the London Open. Actually, that's on. It's you would have changed it. This is on the previous Open. This is Australia Open, and you can trade Australia Open the whole way. But I suggest that when the new open comes, you go ahead and change it to the new open. Does that answer your question? Appreciate you being on here, Chris. So does anybody have any other questions on here? I've given you the website to go to in order to purchase the indicators. You've got your discount code on that web page. And I think, yeah, I put it on that web page. I have gone over 3 different strategies that you can play, and all of them use really the mover and the ranger. They both use it, and then but you got to draw in the higher highs and higher lows. Now, one thing about the higher highs and higher lows, I'm making an indicator for that, and it's going to find them for you. So as soon as it makes that higher high, it's going to have a line up there, and it's going to come across and go with price. So as price keeps on going, the indicator will grow over, and then when it breaks it, it will stop, and then it will start making a new one. So I've got that coming. This is an indicator that it's a drawing tool, and it actually draws your channels. And as you go sideways, like right there, this one is a pretty good channel. And actually, that one right there is probably about right there. So this one is a drawing tool that helps find the channels. So you can actually set this thing all the way over here, and then as the price moves, the channel will move with it until it gets to right there, and then it stops. So you can set it over here and just start it at the end of the last channel. So let's say, and this is going to be available for sale here in a couple of days. Let's say that we were in a channel there and it stopped there. Then we can go ahead and bring this one over. Right there's our channel. So we went up. Let's see. Let me look at it again, make sure. Yeah, right there's our channel. That's more right there. We went up. We come back to it. We went up. We broke through a little bit. That doesn't mean you enter a short there. And then we stayed right in that. But when we come out and literally broke through it, that is a new one. So on this one, we would end up taking this all the way to right there. And actually, so if you look at that, let's see, right there. And then you would do another one from that same spot and just keep on going with it. And there's your channel with that. You can see you got your point there, point there, point here. You got one there. Then we broke out. So this is coming to another channel. So then we start a new one. And I'm going to have an indicator that will automatically draw these out. Oops. Right there would be where you would be with it. But the channels are going to stop right when the line stops. We're not going to let it extend, so it's going to put too much on there. But with having this drawing tool and just like starting it and then moving it way over here and just allowing price to work, and then it will actually pick out the channel for you. And then when you see a consistent channel, you bring the line back to that point. And then as long as it stays in that channel, you keep trading it that way. Like this one here, we come down, we come up there, we come right back down to the channel, and then it broke right there. So that is a new channel. So at this point, right there is the channel, and then you would start another one right on that spot. Oops. And of course, this is at the open, so you're going to have a lot more here. And then this is a lot on the chart, but you're not going to have all these lines at the same time because your drawing tools are going to be gone. But when you're looking at this, you can see more of the channel. It's easier to find. So we got any questions? I think I went over everything that is on the indicators as far as what you need to know about it. Also went over 3 different strategies using the Ranger and the mover together based off of the open, using the mover and the pre-market highs and so forth in order to get a reversal strategy, and also You're welcome, Kelly. And then also how to trade the highs and lows, which that indicator is coming, and as soon as I get it, I'll be doing a training on that as well. Well, if you have no more questions, I'm going to go ahead and end the stream. And again, you can go to the website and it will show you the video, which is, I'll show it to you again. And right there is your discount code, the range remover 30% Sunday 12. That expires tonight at midnight. I will not extend that. If you have any questions at all, let me know. And again, I will post this in the message box again to find the link to that website. That way you can get to it real easy. Having questions, let me know. I'll put my cell phone on there. You can call me if you need to, or send me an email, and we'll go from there. Appreciate it.